Guys, welcome back to the Independent Investor Channel. My name is Ryan. I'm offering this as a snapshot into my portfolio. My bond exposure, my fixed equities in my portfolio makes up about 22.81% of my current portfolio, so it demands some attention. So to provide you guys with some transparency on how I seek out my fixed equities exposure, I'm going to run through all of my holdings that I've got here, both on the U.S. Treasury side of the house and also the corporate debt side of the house. This is going to be part of a series that I do that really help you understand how I seek out my fixed income exposure to the stock market, guys. It doesn't do anybody any good if I give you fish one time. And what we're trying to do is I'm trying to teach you how to fish so you can feed yourself for the rest of your life. All right? If you can understand how to determine what's available on the market right now in way of products, it's going to increase your awareness to how you can seek out fixed equities exposure for yourself. Now, keep in mind, you have to do your own research before you're entering into any of these products. This is just an opportunity for you to sit back for a second and understand through a testimonial how I seek out my fixed equities exposure and what makes sense for me, guys. So let's jump right into it. I've broken this down to make it a little bit easier to understand. You guys know that I have multiple accounts, multiple buckets that I work out of. All right, the first bucket is going to be the largest bulk of my fixed equities exposure. And when I say fixed income, that really is just the category of all things bonds, okay? Whether it be on the government side or on the corporate debt side. And I've made this kind of easy to break this down for you, all right? This on the left side here of the board is my taxable brokerage account, and it is only made up of the bulk of my fixed income ETFs from Vanguard. You're going to notice that all of these products come right off of the Vanguard website, and I'm going to kind of dip you in there to show you, and you guys can research for yourself what it is that Vanguard offers in way of fixed equities in your portfolio. These are the ones that I actually have, and I'm going to be chronicling the actual dollar amount and the anticipated rate of return year over year in follow-on videos. But for the sake of this video, I've had a lot of people ask me how I seek out my exposure in my taxable account and also my new holdings that I have within my Roth accounts, both my spouse's account and my account, okay? So on the left side of the column here, you've got a mix of ticker symbols. And for folks that are new to the investment world, ticker symbols are how we identify the particular product, the product itself, okay? And you can search these out on the Vanguard's website, but on the left side here, you've got basically your bond exposure. And I want to make this really, really easy. Bond exposure is going to be broken up into three categories. Now, I'm not going to talk about extended duration bonds. What I am going to talk about is bonds on the short side, bonds on the intermediate side, and bonds on the long side. And that's also going to be what I'm going to talk about in a follow-on video to actually determine how much exposure you should have to these bonds based on your risk tolerance. It's very, very simple. It's a fundamental approach to investing that anybody can teach themselves how to do to understand, given any risk profile, will kind of give you a benchmark or something to shoot for to tell you, hey, you should be a little bit exposed on the light side of the bond or the fixed equities, depending on if you're a more risky investor, or if your risk tolerance is less in the market, maybe you want to have a little bit more exposure to fixed income in your portfolio. And it just works along a continuum, and it's applicable to any investor based on those couple criteria. Very, very simple to sit back and run through that exercise. I'll run through those on follow-on videos, okay? But you'll see here, if you go into Vanguard's website and you put in these ticker symbols, you're going to be able to see for yourself why I'm invested in these particular products. The B&D is the total market, so it covers all of the bonds that I talked about, long, intermediate, and short, okay? Now, some of these branch into a little bit more of a specific bond holding, okay? So we start with the BSV, and if you go into BSV, this is going to be government bonds on the investment grade side that you're looking to seek exposure to on the short duration. Now, the risk profile that this demands is on the lower side. This is a very, very low risk investment on the risk continuum, okay? Where equities or stock would be on the high side, this would be on the lower side of your risk. Now, the short-term bonds that we're investing in here are government grade bonds that are set to mature within 1 to 5 years, okay? So this entire suite of ETFs is going to invest you in a couple thousand bonds that meet that criteria. The cool thing about this product is it is an ETF. You are not buying the underlying bond itself, okay? You're not buying one bond and holding that bond. You're owning a collection of bonds that is attempting to track the bond index through Barclays, the Barclays index, okay? All this information is on the Vanguard's website. You can go read about that. Now, on the long side of it, very similar products, these two. And depending on the amount of exposure you're looking to gain on the long side, these long-term bonds here are bonds that are held from 10 to 25 years in duration, okay? Now, they may expire. Before that, they may sell the bond based on what the rates are doing. These are things that you don't have to worry about at all if you're buying the ETF that tracks these few thousand bonds that represent this particular ETF offering. So these three right here are what I have on the U.S. bond side of the house to get me that fixed equities exposure. Now, VGIT is a similar government bond holding as well. It is of an intermediate duration, significantly less holdings within this ETF. But I wanted to kind of declare to you guys that I have some exposure here in VGIT. If you're interested in learning more about that product, certainly go on there and check that out. But these that are highlighted and boxed in red are on the corporate debt side, and it's the same kind of idea, except for instead of buying government-backed securities, they're buying corporate bond sides, both of a short, intermediate, and a long-term duration. Same kind of idea, all right? So basically, they're buying a bond, people are putting up money, and they're willing to pay interest based on the duration of that sale, of taking in immediate cash right away for the sale of bonds, okay? Companies do this, the government does this, okay? So both of these will give you exposure to both short, intermediate, and long-term on the corporate side, and then on the U.S. government side, okay? So getting very, very good broad-based exposure is the idea here. Again, we will declare the amount of allocation because it's very, very specific about how much short-term bond exposure you should have, how much intermediate term exposure you should have, and finally, how much long-term duration exposure you should have. So for example, if you have, let's say, $10,000 in the portfolio, all right, and it calls for 25% of your portfolio to be made up of fixed equities or fixed income, okay, these types of products, then you would take that $2,500 and split that $2,500 out of short-term, intermediate, and long-term exposure. That makes sure that you cover the entire bond market. And this is super, super important. You guys are really going to want to stick and stay for my follow-on video when I run you through my actual allocation tool. Most of the major brokerage accounts that you guys have will allow you to go on there and run through this very simple exercise. I intend on doing that for you as it pertains to my portfolio. Guys, I really hope you appreciate nobody is going to do this. Nobody is going to provide you an insight or a testimonial to an actual portfolio. These are the actual holdings that I have. I will declare dollar amounts and actual performance of each one of these, But again, please understand that I offer these picks for entertainment purposes only, just so you guys have an idea how I personally seek out my exposure to the stock market using my fundamental strategies that I've been very, very successful in utilizing, okay? So it really helps bring things full circle when you've got somebody like me who's willing to come on to YouTube and talk about how I seek exposure to the stock market, okay? It's really for entertainment purposes only, but for those folks out there that are sitting back wondering how they can seek out some bond exposure, it's interesting to see how, in fact, I do it, okay? Now, the final piece to this is how I've introduced some bond exposure into the self-directed Roth IRAs over here through both BIV, which is a similar product over here. You guys can see I have short and long. But so I went ahead and introduced intermediate corporate bond government bond exposure over here in portfolio number 1. And then in portfolio number 2, this risk tolerance is a little bit less than mine in my spouse's account. Number 2, I went ahead and purchased, you'll see here, a doubling up of what I feel like is one of the premier accounts, premier products that's offered on Vanguard's website. So I went ahead and took exposure in 2 different places, 2 different buckets within my portfolio. That way I don't have to buy so many and spread myself out. I can just own this one fund here, and it gives me that exposure across that short, intermediate, and long term like we're trying to do. So guys, I hope you enjoyed this rundown of the actual products that I have exposure to for fixed income in my portfolio as a self-directed investor. Easy. It's very, very simple to understand if you understand a couple of things. Understanding kind of what a bond is. What type of exposure should you seek out? What's the difference between a short, an intermediate, and a long-term bond offering? And finally, how you can seek out that exposure and get some money to work in fixed income. I've just chosen to do it through the Vanguard website, and I hope you guys really appreciate my transparency through the channel. Guys, if you enjoyed the video, leave your comments at the bottom. Hit the thumbs up to help support the channel. Always, don't forget to subscribe to the channel. If you're new to the message coming through, guys, very few people are willing to come on and offer a testimonial as to how they seek out exposure in the stock market. This is a very, very rare opportunity to come on and understand how it is that I seek my exposure. I offer this information free of charge, really, to get folks understanding of the prospects in the investing world. It's very, very interesting. I want you to share the message with anybody out there that you know needs to understand more about the stock market in general. But for the purposes of this video, the fixed income portion of the portfolio I felt was very, very important, as we're sitting at about 22.81% of investable capital, or of invested capital in my portfolio. Guys, thank you so much for tuning into the video, and good luck in your investment future.